Hey everybody, this is Ben Murphy with the rcook team.
And I'm Ryan Cook with Swan Financial Home Loans.
In this video, everybody, we're going to be talking about the process for applying for a home loan, qualifying, and maybe things to look out for. Here we go. So Ryan, I am a first-time home buyer, never done it before. I need to get a loan, obviously, to get a house. What do I do?
Well, once you get in touch with me, we make it pretty easy. We're going to get some information from you. We're going to go over your job history. We're going to review your credit score. As long as you fit the qualifications, we'll get you a pre-approval letter. The whole process from the time I talk to you to the time we get a pre-approval letter can be done in about an hour and a half.
That seems so easy. Like, that just seems way too easy. This isn't going to hurt my credit. I know you threw out the credit word, and that's usually a red flag for most people. That's not going to hurt me, is it?
So you have three different types of credit scores. You have your mortgage credit score, your auto credit score, and your credit card credit score. So for your mortgage credit score, you're not going to get docked to run that. Possibly 5 points if you've been running it for several other things in the recent month. But if you haven't been running it a lot, you're not going to get docked at all for a mortgage pool. And you're allowed to do up to 10 mortgage pools in 1 month without being docked your credit score.
So, okay, I've called you. We're qualifying. Like, what are some specific things that you look at that determine how much money I can actually get for a house?
So your debt to income ratio is the big qualifier for how much you're going to get. As long as your credit score checks out, the next thing we're going to look at is your income. So we're going to review your income documents, see how much you make per month, and then we're going to look at your liabilities, how much payments you have per month. That's not counting utilities, that's just your debt payments, so car payment, loan payment, stuff like that. We're going to find that ratio there. You're allowed to use 55% for an FHA loan and 45% for a conventional loan. And they'll let you go to that income limit. So debt to income ratio is going to be determine how much money you can loan.
After that, Ryan, basically you give your client a letter, gives it to me, the realtor, and we can actually go put an offer on a house now?
Yep, you can put an offer on a house, let Ben negotiate the best deal for you. And once we get an address, a property address, we officially have an application from you. And then we're going to get you disclosures out to sign with a breakdown of what your monthly payment's going to be and what kind of fees are going to be involved. Once you sign that, that's going to be an intent to proceed. Then we will get it over to the underwriting department. And what underwriting wants to do is they want to basically want a life story of your income and your assets. And they want the end of that story to be you paid off your loan in 30 years or 15 years, whatever the term is. And so they're going to want to piece together all the pages in between. So they're going to get all kinds of different documents from you to verify everything. They're going to get a verification of employment from your work. They're going to get title to put together some documents to do searches on the house and lien searches and stuff like that. Once all underwriting is complete, we'll get it cleared to close and we'll schedule a closing.
And now that seems super, super simple. It truly is, though. It can get a little crazy with underwriting, trying to get all the documents in. Just relax. You know, I know some buyers will have anxiety and stress whenever these guys will start sending you stuff like, hey, I need this info, I need this info. You've been qualified already. Like,
yep.
Like nothing's going to happen. They just want to confirm certain details.
Yeah,
so I personally wanted to make sure you all knew that, like, don't freak out. This is just part of the process. You know, we're still moving forward always.
Right. They just want to see that house being paid off in 30 years. They need to cross all the T's and dot all the I's and make sure we can get there.
I know this sounds super, super simple, but Ryan, what are some things that would not allow me to get qualified for a loan? There's got to be something that's holding people back.
Yeah, so down payment a lot of times is something that is a hurdle. We do have some down payment assistance programs, but they don't work for everybody. So you want to have that 3 to 5% ready to put down, plus some closing costs, which you can get seller paids. But that's not always the case. Cannot always be the case. Also, your income. You need to have 2 years of solid employment. So if you've had any gaps of employment over the past 2 years, that's going to disqualify you. And then your credit. If you have a bad credit score, you're going to be disqualified. It's big things that really hurt your credit score are 30-day late payments on any kind of bill, especially like an auto loan and installment payment that's a 30-day late. You're going to have to wait 6 to 12 months after that 30-day late payment to be qualified again. Bankruptcies on your credit report, foreclosures on your credit report. Also, what hurts your credit is having your credit balance. So if you have a credit card with $1,000 limit and your balance is $800, they don't like that. They want to see you having around 50% to 20% balance to that limit of that balance for you to have a good credit score. So if we've had situations where we've had somebody had like a $2,000 limit, they had a $2,020 balance. We had them pay it down $200 and it raised their credit score 30 points. So just something as little as that can really help your credit.
Now, Ryan, I got to ask you, why would someone come to you versus going to like a bank for money?
So the banks are an option to get a home loan, but they are dealing with just one lender, that is themselves. So they have one rate sheet, they have their set of programs, and that's it. You come to me, we have access to over 35 lenders right now and access to all their programs. That's 35 different rate sheets, 35 different sets of programs. So we're going to find you the best deal and the best program that's going to fit your situation.
So guys, just like him, my goal is to find you a house. His goal is to help you pay for the house.
Yep.
And that's what makes this relationship so good. Swan Financial has been working with the Deuce Kirk team for years. And every time I feel like I got a client that there's no way we're going to be able to get him in the house, this guy usually finds a way. So just as he just said, 35 different lending options versus a bank's one. It makes sense. Ryan, thank you so much for coming out. I know this is going to help so many people because so many first-time home buyers, especially now today and especially in our economy, I mean, it could be a little scary. Everyone, thanks for watching. If you stuck around to the very end, remember, check out Ryan and Swan Financial. I'm going to put his information here in the description box for you. So if you ever have any issues or questions or concerns about doing it, this guy's going to help you out. He's going to do his job. It's going to make the process super, super simple. Don't forget to hit the like and subscribe button. Get this video out there for anyone who's thinking about buying a home, maybe doesn't know the process. And you guys have a great day.
Have a great day.